Good evening, traders. Today is Wednesday, December 7th, 5:10 p.m. Central Time. The markets are closed. Well, I was talking with some of you YouTube viewers last night on the comments section, and the very thing the markets absolutely had to do last night in terms of the MACD, it did it. It did what it had to do to prevent a catastrophic crash today. Okay? Even though today seems like a flat-ish day, oh no, oh no, 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 no. A crisis was averted. Okay? It was absolutely averted. And this morning, I posted out a video out there in the lower right-hand corner. Here it is. The S&P 500 pattern revealed that I do not believe anyone on YouTube is also commenting or posting about. I believe I found the pattern that the market makers are really doing in the markets. Okay, so check that out if you haven't done so already. But today, in terms of today's action, what happened? We were basically wedged. I have it right on the screen. You were wedged between the 30-minute EMA 50 and the November 17th low at 391. So basically wedged between 395 and 391. Okay? That was not a coincidence. But the core, the absolute core of the action happened right here. It was a convergence of the 5-minute EMA 50, this red line right here, see that? The 5-minute SMA 20, the gray line, and the weekly SMA 20, 393 line. This is a critically important level, guys. Critically important. And so what I'm about to show you is this weekly pattern with the SPYs, EMA, and SMA has not been seen all year. We are in uncharted territory. I'm going to show you some slides on that here in a little bit. Okay, we are potentially teeing up for a huge end of year rally, potentially. Okay, and so I think this pattern that's developing right now is exactly what the market makers have always planned for from the beginning, and I'm going to show you why I think that way. Okay, but today I'm going to get into a lot of MACD, the 5-minute, 1-hour, 4-hour, the formations that had to happen last night, and that had to happen and did happen. Okay, I'm also going to share the VIX and the dollar. And actually, I see weakness now on the 1-hour charts. I think the VIX and the dollar are going to start going down. They're going to somehow mysteriously give way to the markets, it seems. Okay, but I'm going to show you some of that too. And then for the PPI, Producer Price Index, coming up on Friday, I'm going to share with you my thoughts on the MACD patterns that must form before PPI if it is predicted or anticipated to have a favorable or rally/surge outcome from PPI on Friday, because I'm going to go into previous CPI and FOMC events around the MACD. Okay. All right. So this morning, though, this is a slide that I presented, and I call your attention to the middle part of the screen right there. Remember from this morning, the weekly time frame, the weekly chart is wedged now in between the EMA, the weekly EMA 50, this red line, and the SMA 20, the gray line. Okay, it is literally sandwiched for the last month, the last 4 weeks, including this week. We have been sandwiched in that range. Okay, that's what this red line is up here, and that's what this gray line is down here. That's the weekly SMA, weekly EMA. It's perfectly sandwiched. Okay, and we touched that purple line this morning, which was the low on 1117. See that? And we held it. So far we're holding. Okay, now let's get into, all right, so last week actually I presented this slide. Now I want to call your attention to this one right here for now. So you see January, April, August, December. Okay? Easy enough, draw that trend line. You can see the trend line. Now, call your attention to, this is the weekly chart, so call your attention to the weekly SMA gray line, the weekly EMA 50 red line. Look what happens in April. Okay? Comes up, kisses the probably that was the 200 MA, I believe, 200 moving average, kisses it, comes back down and fails to backtest the SMA 20, and not only that, fails to backtest the EMA 50. See right there? See that? Look at this failed backtest. Boom, 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 boom. It just failed, right? Straight up, and it just kept on going way down, right? See that? Okay. And again in August, so we're coming up, coming up, coming up. August, we kiss that 200 moving average, come down, fail to hold. See that red line? Failed to hold the EMA 50, the same, the weekly EMA 50, the same one that it failed in April, right? So it fails that one, fails the SMA 20, right? And then you just keep going down. Now, you attempt to come back up, SPY attempts to come back up, only to fail the SMA 20 again, way down. Okay, so that's what happened in August. So that's what happened in April. That's what happened in August. Now let's fast forward to December. Today, not only are we not failing, we are wedged. We are wedged in between, as you saw on the previous slide. Remember that? In between the EMA 50 and the SMA 20. We are wedged right in between it. Okay? So, to summarize, what I think the market makers have planned for us is basically we've come down, failed. In April and August, we have failed the EMA and SMA tests. Failed twice already. So basically all year, right? So, come up, come down. Come up, come down. Now we are coming up and we are flattening out horizontally. Okay? So here's what I showed. See this? This is a horizontal, more of a horizontal arrangement. Right? We have come up. We'd had prior to this horizontal arrangement, it's coming up. But now it's horizontal. Basically, okay, yeah, here we go. Come up, come up, come up, come up, and now we're going horizontally. Right there, horizontally. Basically, it's like, I think what the market makers have in store for us is they're intentionally making this go horizontal because they want to form a wedge. Form a wedge like this. And eventually, it's going to come to a head. Up or down. Which way are you going to go? I think that's how they want this December to end. Up or down. Keep us guessing. In the neutral position horizontally. Okay? That's my thought on that. All right. And last week when I presented this slide, I just asked a question. I just noticed there was a gap right up here, right around 420. And I asked the question, could that be where they were headed? To try to fill that gap. One last time. One last time. 420. Before the house of cards comes crashing down. Could that be? I don't know. That's just a question, okay? So that's what I wanted to show you about that slide. Now, let's get on over to the NASDAQ. This is NASDAQ futures. This is the 4-hour chart here on the left side, and the right side is the 1-hour chart. Okay. Primarily, basically see the same horizontal type arrangement, but prior to that, it was a more upwards arrangement. It was a ascending, and then now we're flattening out. Okay, so now this is what happened at the end of the day in the 4 hours chart. Call your attention down here. So check out the 4-hour. So I hope that you keep on trying to flatten out there, NASDAQ. You don't want to get down past this -100, right? You don't want to do that because that's bearish. So in futures tonight, we need to keep seeing it flatten out. So far, what I saw, it seems to be doing that. So it's got to hold serve. You've got to flatten out. You don't want to start getting below -100. Okay, NASDAQ futures 4 hour. Now, on the right hand side, this is NASDAQ futures 1 hour. That's the encouraging sign right here. See that? The exact thing that had to happen last night, meaning the 1 hour had to curl up and get back over this negative 60 line. Full stop, you have no choice. And that's what it did. Okay? That's what it did. That's what prevented today's, we didn't crash. It held serve. Okay? It held serve. Okay? So that's NASDAQ. And let's see about, okay. S&P 500, 4-hour chart, left-hand side, 1-hour chart, right-hand side. See that perfect sandwich? And you see the ascending, beforehand. See that? We were going up and up and up, and now we're flattening out. That's perfectly to plan, guys. That's what the market makers want. Now, check out the 4-hour down here. So it is trying to flatten out, right, on the 4 hours chart. It doesn't quite get down to the negative 35 line. So, okay, good. So that's good. I see it's trying to like create a little notch. That's good. So you just got to keep trying to flatten out so that you can turn around and start going up. Okay. So 1 hour's chart. Look at that. Very good. See that? 1 hour going up, avoiding disaster. Okay. So right now I'd say it's at probably about negative 10ish, whatever. Right halfway. It's not at the negative 20 line. It's at the negative 10ish. Okay. So that is futures, what happened today as of close. Okay. So, before I get started talking about this, wanted to give a shout out to Brad. You didn't think you were going to be on YouTube, did you? You were asking me some questions last night. We were having a conversation in the comment section. And here's where I said right here that it's highlighted. Ultimately, the 1 hour needs to carve out a higher low notch, which will stop the 4 hour from falling. Okay, so let's get into that. So this bigger picture is the 5-minute chart. Here's the 1 hour. Here's the 4 hour. So I wanted to kind of put it all into one, so I don't flip back and forth, and it's just easier to recognize. Okay. So let's just go ahead and start with the lower time frame. You will always hear me say 5 minutes, 5 minutes, 5 minutes. It starts with the 5 minutes, then it feeds into the 1 hour, and the 1 hour feeds into the 4 hour. All right, that's intuitive. Okay, now look what the 5 minute did last night. So start with point 1. This is after close. Boom, comes up. Pretty much stays above zero with a slight dip, but comes back above zero until like 5 a.m. So all night long, from 6 p.m. Eastern time when futures market opened back up until about 5 a.m. it was able to stay above zero with a slight exception here, right? Now, that, and then from 5 a.m. until, what time is this? 8-ish, 7:30, 8 o'clock in the morning. Then it finally goes down. This 5-minute formation, so creating point 1 all the way to point 2, that creates point 1 to point 2 on the MACD. See that? It caused the MACD to come back up and separate from the signal line. Okay? So 1 and 2 on the 5-minute cause 1 and 2 on the MACD. Got it? Okay. Now, point 1 and 2 on the 1 hour, point 1 and point 2 on the 1 hour, this higher low notch right here, caused this notch to happen on the 4 hour. It basically stops the fall, right? That's the goal. You got to stop this downward trend. You got to no, let's create a little notch. You got to stop it. Okay? So that's what I wanted to show to help put things in perspective. Okay? So now, here is a critical observation I want to share with you. The zero line on the MACD, which is right here, the zero line on the MACD, regardless of what time frame, it doesn't matter what time frame, 5 minutes, 30 minutes, 1 hour, it doesn't matter. The zero line on the MACD corresponds to the EMA 50 red line. Okay? So basically, so when I say the price must stay above the EMA 50, I am therefore also saying the MACD red line must stay above the 0 line. Because I want to call your attention to this. See this? Okay, see how the price is consistently bouncing off the EMA 50 right here? Right? Over the line, over the line, over the line, over the line. Except this moment when it went under the line. But guess what happens to the MACD also? Crossed into the negative territory from being over. See that? So, therefore, EMA 50 equals the MACD 0 line. That's what that means. So when I say something about, well, the MACD is crossing, like in this example. See this? Right here, right here, right here. When it's crossing above the 0 line and going from negative to positive, oh, guess what happens? Guess what happens at that moment? It crossed the EMA line too. That's why it's so critical. Okay? They are one and the same. EMA equals MACD 0 line. Okay? Okay. So therefore, when you fall so far from the 0 line like this, that's like, wow, that's total loss of momentum. Okay? So, okay. Now, this morning from, we'll just say 7:30 a.m. So what it had to do, it had to go from, so it went from point 1 to point 2, 2 to 3. Now, this is a key, here's an observation that's important. So you see how it goes from 2, from the negative, crosses the 0 line into the positive, but yet you fall back down, back from the positive, back down through into the negative. So you've basically crossed your own EMA line twice. When you have such a big move like this, it's all but guaranteed it's going to come back like 0.2 and 0.3. It's all but guaranteed it's going to hit the negative line again, so you're going to recross your EMA 50 and make a higher low, but you're still going to cross the EMA 50, cross the 0 line, most likely, unless you just got some crazy power, and that doesn't happen. But most likely, you're going to make a 2, go way up, come back down, and make a 3 in the negative territory. So what that means is when you see a big move like this, like, whoa, that's huge, you can almost say, you know what? You probably shouldn't place a trade unless you just want to scalp trade it real fast. Yeah, I guess you could do that. But you shouldn't get calls because it is going to come back down. That's my main point of showing you this, okay? But again, if you're just trying to scalp trade it, who cares? Get in and get out within 15 minutes, okay, that's fine. But if you're actually trying to maybe hold it to the end of the day or something like this is going to most likely come back down and fail the EMA 50. And that's exactly what happened right here. See that? Right there. So you crossed it right here, right there. Up, 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 but you came back down. But then you see, you're right back at the zero line again. Okay? That's what I wanted to show you about that slide. Now, SPY, I'll take a couple minutes explaining this one. And LRF Car Reviews gets credit for asking this question. That was this morning. He had asked me early on, like an hour or so before opening bell, and he says, "Hey, futures are back down again. Do we still have a chance at the Santa Claus rally?" So my response basically was, the markets are opening below the weekly 393.8, which on SPY it's 393. That's what I was referring to. So we are opening below 393 SMA 20, which now serves as resistance, right? That's what happens. We came up, we opened right here, but we broke it, and now we just straddled it the whole day. Okay, that's what I was referring to. So here's the 30-minute EMA 50. How do I know that? Because I keep the 30-minute up, and I was watching the 30-minute too. I'm like, oh, you see that? You came up, kissed it. Oh, got rejected. Came back down. So, yeah, the 30-minute EMA 50. Here's the November 17th low, 391. And look at that. It kissed that down here, kissed that up there, and came back down into the core of the SMA 20, the EMA 50, and the weekly SMA 20. That has been, right? So the weekly SMA 20, you guys, that is a critical line because that's what has failed all year. All of 2022. All of 2022, we have failed it, right? We failed it in April. We failed it in August. And now we are here. And for a month, you guys saw that. I showed you earlier. We've been in a range for a month and haven't failed it yet. Haven't failed it yet. We've been in here so we have not seen this pattern all year. We are in a horizontal, neutral pattern, and the market makers are going to make us guess right up until the end. You know, because you can't guess when it's neutral, right? You can kind of, if it's a descending channel or a falling wedge, that's probably going to be bullish, right? You can kind of guess that. You can't guess neutral, okay? But I think that we got something up our sleeve called the MACD that can help us make that decision. Okay, so anyways, let's finish this up. This is the MACD, the 5 minute chart. See that? Going up in extended hours. Okay, look at the RSI, just kind of evening out right there at the 51 level. That's good. That's not bad. It's not good. It's not bad. It's like, I think it just wants to kind of reset itself, right? The RSI should be trying to reset itself. You can't stay in overbought territory too high. That's just a recipe for a crash. So you need to come back, stay in this neutral position. That's what it's doing right there. So that's good. That's fine. Okay, see the 30 minutes MACD. It's going up and up and up. And so that's going to encourage the 1 hour to kind of keep going up and up and up. Okay, so that's what I wanted to show you about SPY. Okay. Now, as for, hold on, TQQQ. I'm not going to comment more about this. It was just basically the same pattern as SPY. And this was the 11,465 level on NASDAQ futures. Guess what? That kissed that too. I believe that was set on November 29th. Okay, so, but everything else is the same discussion, right? As far as the MACD goes, and RSI looks good. Okay, so, all right, guys. What you're looking at on the left-hand side is VIX. On the right-hand side is the dollar. I intentionally left it kind of zoomed out because I'm not going to call attention to this up here. I want to call your attention to the MACD down here. Okay, and the MACD down here. Now, this is the 1 hour chart, by the way. Yeah, 1 hour chart VIX. See this? Yeah. Okay. See this right here? It's already crossed into the negative down below the signal line, right? No disputing that, right? Here, let's have a look here. See that? No disputing that. And I will tell you, when you look at when you're looking at the 1 hour chart, anytime you start to cross below the signal line, it's already done. It's already done it. It's already did it. I estimate it's going to fall down to somewhere around here-ish, this range. Because that's what it always does. That's actually, it's not just VIX. It could be SPY, it could be TQQQ. It doesn't matter what the security is. On a 1 hour chart, as soon as you cross the signal line and heading down, guess what? Down, 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 down. Right? Down, down. Oh, this was a little bit up, but then down, 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 down. Right? Down, 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 down. Maybe a little bit up, but then ultimately down. Always down. See that? Down, 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 down. A little bit up, then down, down. And guess where you're going? You're going to go down. I mean, that's just the nature of the beast. That's the nature of the beast. That's exactly what happened with SPY over the last 4 days. Down, right? I mean, there's no exception to that rule. Okay, let's check out the dollar. You were going up, 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 up. When was this? Oh, this is last like 4 days. Yeah. Last 4 days. Well, but guess what? Well, you're gonna go down too, right? I mean, you just have to. Look at the trends. It's always up and then down, up and then down. It's just how far down. I think you're probably gonna land somewhere down here too, somewhere down here. So based on, see, look at that. I mean, when you go up, down, up. I mean, this is way earlier when the dollar was just going crazy on everybody. Up, but then it goes way down. See that? Up and then way down. See that? So you're on the downswing side now, guys. I'm talking about dollar and VIX. So that's what I mean. I feel like they're clearing the way for something. You know, you had to throw those the 4 days in there of that 4 days of pretty big down, scaring everybody, thinking we're going to crash. But I get a sense that based on the VIX and dollar 1 hour patterns that you're looking at right now, they are clearing the way for something. Okay? And a couple days ago, I told you guys, what was this? It's today and Tuesday. Yeah, Monday morning coming in. We gapped up. Now it makes me wonder, now that I see the 1 hour's chart right here, the 1 hour MACD, you're on the downswing now, buddy. Makes me wonder if you're going to come down and all the way down and fill this gap. Makes me wonder. See what I'm saying? Makes me wonder. Right? Okay, so that's what I wanted to show you guys about the VIX and the dollar. Okay, now, okay, on this slide, this is the final slide I want to show you. As we know, Friday is Producer Price Index PPI, right? Let me show you some patterns from the past. Let's start from 10/13, my favorite date. This is when the September CPI came out. Red hot. Remember that? It set the markets in pre-market 500 points down. Dow was 500 points down, but ended up the day 800 plus. Look what the MACD was doing right as CPI came out. So here's the flash crash during extended hours. I'm sorry, pre-market on that day on 10/13. Right? See that? Huge gap down. Huge gap down. My jaw was dropping. But look what the MACD was doing, guys, before that CPI number was even released. Up. This is the 1 hour chart, by the way. Close to zero. Oh, minor speed bump inconvenience from the CPI number, but we don't care. We're going to slam it up anyways. My point is, for you newer viewers, the markets already decided what they were going to do. The markets already knew what number that was. This is compelling evidence. The markets already decided what they were going to do. They were going to, the rally that we are in right now, I contend started on this day, 10/13. Because look at this up channel. Look at the up channel since then. Here we are today. So it's been on an up channel, but now it's going horizontal to a neutral position. That's the overall trend, guys. Now I finally see what the market makers have planned. So it's been up. But since about 11:10, when the 11:10 CPI came out, it's been neutral right here, trading in the weekly EMA and the weekly SMA for SPY. That's exactly what it's been doing. Okay, so anyways, back to the MACD. So despite a red hot CPI, markets on the MACD were already getting ready to surge. They were like, I don't care. We already know what the number is. We're gonna surge anyways. So how could you tell me a red hot CPI comes out, hot, but yet the following days, we're going up? Okay, what's up with that? Markets have already made a decision, guys. They made a decision what they're going to do. Okay, now let's fast forward to 11:2 FOMC. This is the rate hike. I traded that day. Here's that big wick. You remember right at 2 p.m. Right at 2 p.m. when the rate hike was announced. Market surged. But then at 2:30, Jay Powell comes out and I like to call it mic drops everybody, and the markets plummeted. Okay? So 2 o'clock. 2 o'clock. The markets surged right when the number was released. It was 75 basis points, but everybody expected that. Look down here real closely. I drew the arrow so it's easy to see. The MACD was already going down before 2 p.m. Before that number was released. I contend to you the markets already knew that number too. They already knew that. They already knew. So when Jay Powell finally took the mic, and they already knew what Jay Powell was going to say. So it was already going down before then. And then it really went down after he spoke. Okay? Now, let's fast forward a week to November 10th CPI. Cool number. Like, it almost got cut in half, it looked like, right? Huge surge up, right? Everybody remembers that day. Look what the markets were already doing. Notching out a higher low on the MACD hourly. Right here. See that? That's undisputed. Notching out a higher low. But see this little uptrend? That's an extended hours, by the way. That's extended hours. You know, kind of floating up. Okay? The MACD was already going up. It was already going up from a higher low. Already going up before CPI number came out. And I remember that the evening before this, oh, it was rough. It was a massive sell-off. Everybody thought, oh, we're going to crash. Because everybody also remembers the 1013 CPI was red hot. We're going to flash crash 500 points like we did on 1013, right? That's what that includes me. That's what I was thinking. I was like, oh, man, the CPI number the next day right here, oh, it's going to be red hot. Yeah, but the markets are making higher lows and coming up before the CPI number already came out. They already knew what it was, guys. They already knew what it was. Okay? Okay, so here is Jay Powell's speech. Before he even spoke, the MACD for several hours, this is actually a couple days. See that? Going up, close to the zero line, boom, exploded. And I've got video that proves it. I did this on a previous video because I captured it real time on the timestamps on the video. I wasn't 20 seconds into my video. Jay Powell hasn't even stepped up to the mic yet. He hasn't even stepped up to the mic because you could hear me commenting in the video because I turned on closed caption to prove it. He hasn't even stepped up to the mic and the markets surged. They already knew what he was going to say and they already made a decision what they were going to do. Okay, that's my point. So time and time again, there's evidence in the MACD that the markets are showing their hand. The markets are tipping their hand what they plan to do. That leads us to today. So today's Wednesday. We have till Thursday. So as of today, see, it's going up and up and up and up and up. Let's see what happens on Thursday tomorrow. Is it going to go up and up and up and up and up to get close to the zero line as possible, like this, in order to surge on Friday? That's what I'm saying. Okay? That's what I'm saying. So that's what you guys should be looking out for too. You know, if we instead start to see the like Thursday late afternoon trading, maybe see the MACD start to curl down or something like that, then that's probably the market's way of saying, yeah, we don't like that PPI number coming up, but we'll have to see, okay? Because y'all know next Tuesday, right? Next Tuesday is the CPI for November, and then Wednesday is FOMC. So, whew, yeah. So I'll definitely be giving you a prediction what I think, on that Monday, before the CPI number comes out, right? Monday. Well, it comes out on Tuesday early in the morning, but you got to do the prediction on Monday, right? So Um, yeah, I'll let you know. But oh yeah, we got some big data coming out. Okay, so that, my friends, is all I've got for you today. Feel free to please follow me on Twitter. Get some real-time quotes. I mean, real-time tweets. I'm sorry, not quotes. And if you like what you saw today, please give it a like, share, and subscribe, or click to be notified. And with that, I leave you with my calling card. I am Agent 000, signing off.